Hi everyone, welcome back to Be Rich. I have Sashwath back with me in the studio. We have an interesting topic to talk about today, which Sashwath found. And without wasting much time, and let Sashwath first talk about it. Elaborate about the topic, then we can further analyze it as we go into it.
Yeah, so the topic I wanted to talk about today was the firm Ernst and Young, which is one of the big four firms which engages in auditing, consulting, tax consultations as well. So this firm is basically one of the largest firms before Anderson, which collapsed after Enron. So this is one of the big four firms, and it's one of the most prevalent consultancy firms in the world. A lot of very large firms operate with this firm as well.
Correct.
So, what about this company, which is on the news now, is that they're planning to spin off their consulting wing. So they have, as I told you, they have three wings mainly: their auditing wing, their tax consultations and taxations, as well as their auditing wing. Consultations, taxing, and auditing. These are the three wings, and they're planning to spin off their consultation wing because there's a conflict of interest which prevents them from targeting the same clients for consultation as well as auditing.
Auditing, yes.
So they're unable to do that because there's a conflict of interest. This happened after Enron's collapse, and there was an act called the SOX Act or SOX Act, which basically said that if you're doing auditing practices for a firm, you are not allowed to provide any non-auditing services for the same firm. So that basically means there's no conflict of interest.
Correct.
So what EY or Ernst and Young felt that maybe there would be value unlocked. Ernst and Young's previous chief executive officer was a catalyst or proponent for the spin-off as well, and there was a deal called Everest, which they wanted to float the consultation arm in a spin it off into a separate company and float it publicly. But then this was shot down, and there was a lot of rifts which opened up between EY heads. And so the interesting thing about EY is that it's not just one head office and everything else underneath it. It's more of each country has its own national offices, and the partners over there own that branch.
Yeah, it's like Interpol.
Yeah. So basically, you need everyone on board for this to work.
Correct.
So you have to give enough to everyone where they feel that the deal is sweet enough for them to be able to get on board with it. And obviously, you'll have some holdouts, and no matter how much you pay them, they're not going to get on board. That's always going to be the case.
True.
And that's exactly what EY was battling with, and they scrapped Everest even before it took a foot off the ground in terms of the plan.
True.
So the plan was supposed to be for $100 billion. They're going to spin off the consulting firm. Its revenue is $25 billion, and they're planning to take on $19 billion of debt in that consulting firm just to pay off the auditing firm's global heads who have a stake in the consulting firm.
True.
So they basically wanted to buy them out, pay them a lot of money by taking on debt, money they don't have, and basically spin it off in the public market.
Which they thought would be valued at
$100 billion. But this never even
made it out the door.
Yeah, never even made it out the door, and it fell flat. So now it's again back in the news because one, there's a succession plan which is going on where no one knows what's going to happen after the chief executive officer has to retire now, and no one knows who's going to step in after him. And that's one thing which is going on the side in EY. Another thing which is also happening is that a new private equity firm called TPG has decided to give them an offer and say, we're willing to buy out the consultancy firm and spin it off later on and, unlock potentially billions of dollars of value.
Correct.
So that's what they said. And, the auditing heads have said, no, this is not flying. And go fly a kite. You better pay us a little more amount of money. And what TPG has said to sweeten the deal was that we'll raise even more debt because it's a private deal. There won't be as many regulations on how much debt we can load on to the company.
True.
So we'll load on as much debt as possible and sweeten the deal a lot for you guys. So they're basically saying, please let us take the company separate. Let's separate the company, and there'll be billions of value. Billions of dollars of value will be unlocked through this deal.
True.
But that's where it stands right now.
Yes, which runs in the same problem which they had in the first one.
Yeah.
Which is the IPO, why it shelved, because this one's the problem when you have a Hydra.
Yeah.
you got many heads, and each head needs to be fed. Each
Yeah.
head needs to be considered as equal. And the problem for Ernst and Young is, though it's a well-known brand,
Yeah.
it's a global brand. The company internally
Going through
runs.
strife.
It's actually not really a single entity.
Yes.
And getting them all to agree on this deal will be a monumental task.
It's like the European Union with their multiple collective of countries.
Yeah, it's like watching coalition politics.
Yeah.
You have all minority. So any minority government guy who will hold out one single vote, and no matter how much, and you see it even in Biden struggling.
Yeah.
One lone Democrat will be like this seesawing because he'll say my local countries don't want it.
Yeah.
So then he'll keep on porking, throwing more pork, hoping finally the guy flips over. So this is what I don't know. I really don't see it. And yes, you're right. They could unlock potential for both organizations as auditing and in consulting by
Yes.
unlocking this, separating both of them and preventing conflict of interest. But I think this conflict of interest separation will only be on paper, but on actual practice, it'll be bridged over
Correct.
internally. So I don't know if even if this thing, if regulators will approve this kind of situation.
Yeah. And the only reason regulators have not gotten involved is because it never even got to the stage of requesting approval from regulators.
Correct.
So the SEC is basically sitting down there like, do
Yeah, you
whatever
guys first sort your crap out and then
Yeah.
come to us.
Yeah.
Then we will look and investigate and see if it is worth
looking at. Yeah.
into allowing this to happen at all.
Yeah.
So
And another thing which they're fighting over is not just whether it should be separated or not, tax business. What are we going to do with the tax business? Will it be a 50-50 split? Will the tax business, all of it go, majority of it go to the auditing firm? Will the majority of it go with the consulting firm? So the consulting heads have said, tax consultancy and consultancy in general and advisory services go enmeshed, are enmeshed and goes together. So we were hoping to take the tax business with us, the majority of it. Whereas the auditing firm is saying, no, we want the tax business with us. And they're, putting up a stand saying that you can't take the tax business with us, with you guys. Majority has to stay with us. And TPG has now come in and said, I don't mind if the auditing heads take over the tax business in terms of majority. We're only eyeing the consultancy business. You guys can do whatever else you want, take whatever you want. Just let me spin off the consultancy business. And insiders are saying that, first of all, EY is not even considering TPG to be a part of this story at all. And they're basically saying that who are you to come in and tell us what to do and how to run our business? Please mind your own business and get out of here. And TPG is a publicly listed entity with $137 billion in its of assets in management, under management. So yeah.
correct. And I'm just looking at the Zenron Arthur Andersen problem, and this is why people are worried with these oversized big auditing firms.
Yeah.
And even recently, Deloitte made the news for walking or quitting Adani.
Yeah.
Because these big auditing firms, these big five, have a huge reputation on them, and they're like a cartel, and they control global reputations. So they decide, if this is okay or if it's not okay, and all investors and banks just rely on these guys saying if it's passing the smell test or not, sniff test or not. And when such colossal amount of money is involved in it, you never know where bad players are there, and this could be terrible consequences. That's one advantage in Ernst Young, because Arthur Andersen was more like a pyramid, centralized, while Ernst Young is
it was very
decentralized. So this kind of corruption within an organization is
it's rare for all the players
correct.
to collude
When they
together.
can't even agree on something which is good for them, like this, to do something behind the door is very unlikely. It will be ratted out even sooner than it gets started.
They themselves will rat themselves out.
So I don't know. It's an interesting thing to look at. Definitely, and we have to see and how it plays out. I'm curious to know who bought this TPG private equity firm in. Must be one of the partners. Must have.
No, and the interesting thing is the amount of debt when interest rates have climbed to sky high levels compared relatively to 0%. They're still willing to load the company on with debt just so they can pay off the auditing heads. Which is, it sounds like madness to me, because
exactly. But there must be so much of value which we're not able to see.
That's
the thing with privately held companies. you really don't know. Like TCS, no one could see
Yeah.
the value TCS was holding till
Until
it
it
was
got listed.
unlocked and listed. Then everything came out, and we're all like, "Wow, it's like what a massive
Entity.
entity it is." And Tatas have been enjoying this privately for so long. You
Yeah.
know, you don't know, and it can also fly flat. That's why going with IPO would have been interesting. Would have given an opportunity for the public to play in this,
Yes.
participate in Ernst Young, but unfortunately, it didn't get through the door.
Yeah. So
Anyway.
that's about it.
Thank you for joining us today on Be Rich. Hope you found this topic interesting and informative as always. If you do like our channel, please subscribe and turn on the bell notification so you'll be notified when we have a new video out for you. Shashwat will be heading back to university in a day or two. Then we'll be back to StreamYarding and remotely recording. And we will definitely do more of the screen shares as we analyze some American stocks. Probably we'll try and do some which we feel you should not be buying, ones which you can avoid. Because there are plenty of stocks in the American market where we can talk about which you should not be buying. We feel you should not be buying at least. So we'll talk about those. Thank you for joining us on Be Rich today.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.